There's like a 9-month year, and then the summer gets slow. Now, over the last 10 years, the summers have not been very slow, but there's still a shift in momentum. There's a little bit different trading environment in the summer than there is in the 9 months of the high participation, high volatility. And so that's what we're going into. A lot of people have heard this term, sell in May and go away. We have changed that to it's because it's not true. People aren't selling in May and going away. They're hedging in May. They're protecting their portfolios in May. They're taking risk off the table in May. They're trying to sleep better about, the risk that they have. So one way to frame this is that when you're looking at the S&P 500, over the last 7 weeks, would you say that there is a upside risk or downside risk inside of the markets? Are you worried about missing 1% or losing 10? And that's a way to frame this. We are running right back up into these previous highs, and I'd like to again kind of go a little bit further into this kind of idea that we were talking about in the market analysis video, that Wall Street always gets its fill. And as we went into the end of the week last week, we priced in rate hikes in the future. And this was right around 41.4 last week. So it hasn't changed, but it pushed out into the future and then came back. And this was 41 point, I believe, 1 early this morning. It's higher now, 41.5. The actual hike being pulled into this year. Remember, earlier this year, June, they were pricing in a cut. A cut. And now we're pricing in a hike. And so how does one protect oneself from downside risk? Well, they buy the dollar, and the dollar is in a gigantic pullback from our lows of the year to highs of the year, and there's a double bottom that we lifted off away from inside of that support level. And although there'd be nothing unusual about another full retracement, right now we're going straight up in extensions from last week, Wednesday's highs to highs. So the dollar's in a rally. So what's in a pullback? The dollar's in a pullback. What else is in a pullback? The VIX. The VIX is in its very first full 50% retracement long after a trend break. We were anticipating the indices rallying, and we were speculating on Monday and Tuesday this week how high we could travel inside of this rally this week. And we speculated that we would at least continue the rally on the indices until the VIX got to the 1915s. Well, we got to our 1915s front run by 1. And this is where we had an expectation that the indices would rally in this environment. As there was room for the VIX to fall into the support, the indices would rally till at least we got to these 1915s. So we got to the at least point. We got to the at least point. We were speculating about whether it would break the 61.8% line of the short or whether we'd fill this gap up here. Well, we just completed a profit target to a long setup that we had been inside of yesterday afternoon. We just completed it. Something else that we did is that this stream continues at emoneyaddict.com. The link is in the description. Join me there for tools and resources for learning measured move trading. I wrote the book on the measured move. Check out the hundreds of others that have learned trading plan development, pattern recognition, money management, and trading discipline with me to become the best, most confident trader that you can be.